Is the pain for PayPal over? Yesterday, surprisingly enough, on Thursday, the stock went up close to 6%. Some people, like myself, were like, oh, hold up, wait a minute, what's going on here? Is the market finally understanding PayPal? Is the market finally going to reward us long-term shareholders? Maybe, maybe not. But it was nice to see the stock being up over 5%. Why is that? Well, Alex Chris, the CEO, had a little chat with an analyst from Bank of America, shared some little details which were quite positive, some things that we knew already in the past, and some newer things as well, which we're going to cover in this video. Now, right now, this is basically the big picture for PayPal. This is a 10-year view on what the business has done with regards to revenue, free cash flow, return on equity, return on invested capital, gross profit, and net income. Of course, you had that period here. This is last 12 months metric, so you always have to take that in consideration. But basically, this part right here in the middle, you get that bump from the pandemic. Now, overall, the business has continued to grow revenues. Overall, the business still continues to generate free cash flow. Yes, it peaked. Free cash flow peaked, of course, during the pandemic. Then we took a little hit, but right now it does seem like we are back on track. And in my opinion, we're going to reach those previous peaks in the coming years as the business becomes more and more profitable. Remember, the number one goal for Alex Chris when he came in was profitable growth. And so it would also not surprise me if we're going to see net income increase, gross profit increase as well, and then you will see these metrics right here improve over time. Right now, the company has a market cap of $70.1 billion. On all of those metrics that you can see on the screen, forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth, all of them are much lower than their 10-year, or in this case, 9-year mean. Now, if you want, we can even take the 5-year mean, but then you get that huge impact from the pandemic. And here, of course, you are much lower. So let's say, 10 years. So you got before the pandemic, and after the pandemic, we're still much lower. We have a forward PE of 16.2 times. We've talked about PayPal before. I brought Emir on the channel, basically made the argument that PayPal was valued as if it were not growing, meaning 0% growth. And we know that that's not the case. We know that PayPal is growing, it's growing revenues, it's growing free cash flow, it's growing earnings. But despite all of that, right now the average analyst price target only sits 16% higher than the price we're at today at $77.69. In my opinion, the moment PayPal will start teasing the $100 mark, I don't know when that will happen, but suddenly you will see a lot of analyst upgrades. Why? Well, as always, because the stock has gone up. Because if they were truly following the company, then they would notice that the business is already improving right now. But I can understand that some analysts do not want to jump the gun, and so they're waiting until maybe they see some further improvements, or they're just waiting until they see the stock price go up. Because imagine you're an analyst and you have an overweight rating, a buy rating on PayPal with a price target of $100 or so. And then for 6 months, the stock doesn't do anything. You're going to be looking silly, even though your thesis is completely right. Unfortunately, analysts and us, we don't really have this same, let's say, time frame. They usually have to put price targets for the next 6 to 12 months, sometimes 18 months. Me, I don't care. I'm here for years and years. I don't have to show anyone the performance each and every quarter. So that's usually how that works. Now, before continuing, if you enjoy these type of videos, leave it a thumbs up, subscribe if you have not. We really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I first want to start off with a couple of things that were mentioned in the earnings call in case you missed those things. So Fastlane, with regards to Fastlane, there was an 80% conversion with returning guests. They're aggressively pricing to drive adoption. 40% of unknown users opt in to Fastlane for payments on guest checkout. Innovation is not really baked into their guidance. 80%, this is with regards to Venmo, 80% of the money coming in leaves within 10 days. That's $18 billion that flow into Venmo each month, and 80% of that leaves within 10 days. He was really not that happy about that. 7% was SMB volume in PPCP. They serve to win with this small business market. Pay for performance culture, so less stock-based compensation, which is great. Then they talked a little bit about the Xoom investment. That's where PayUSD, their stablecoin, comes into play. Now, before going into the notes I took from the call, there are a lot of, let's say, super investors that are starting to add a bit more PayPal to their portfolio. Of course, still a small portion of most of their portfolios, but the money amount is starting to grow. This is adding. Then you also have super investors that have opened a position in PayPal. Of course, again, quite a small position in their overall portfolio, but the value here is quite meaningful. So maybe sentiment is starting to change. Just maybe, because we also had two analysts that came out with some more positivity. So we got here PayPal rated buy in new coverage at New Street, citing pivot to value. 2024 is a transition year. We expect to hear news and supportive KPIs on new initiatives before monetization comes through more in 2025, driving transaction margin dollar ahead of street estimates. The analyst is encouraged by PayPal unit Braintree's more rational approach to pricing renewals, and PayPal's new guest checkout Fastlane should boost volume than pricing. It has a price target of $80 on the stock. Then PayPal was upgraded to a buy at Mizuho on Fastlane prospects. Of course, the analyst at Mizuho we know is Dan Dolev, covers a lot, if not all, of fintech. So the Fastlane product suggests the potential for a $1 to $1.5 billion transaction margin dollar increase, about 5 to 10% upside in the medium term, based on the $1.43 trillion of annual e-commerce spending market addressable by Fastlane. As the Fastlane opportunity materializes, PayPal should increasingly trade at a modest premium versus the payment group. That's 19 times 2025 EPS versus group at 15 times. In Mizuho's view, implying a price target of $90, that's up from $68. So again, more positive momentum. And so let's talk a little bit about what Alex Chris said during that recent conversation. This is really a short summary. So one, again, talking about leadership, PayPal is building out its leadership team with a focus on the consumer business. More recently, they added new leadership for Venmo and also for the ads business. I think the ads business could be huge for PayPal because of all the data available to them, because of, well, the merchants and the user, the intersection between both of those. I think that could be a huge business. I think at Uber, they expect it to be $1 billion worth, the ads business, this year or next year. And I think PayPal could be much bigger than that. But of course, that's something for the future, not for now. Secondly, focus and prioritization. PayPal is focusing on doing fewer things that provide more value to customers. They've been talking about that before. They've been trying to do way too many things and things that don't really provide that much value to customers or to the business itself. With regards to growth, PayPal is prioritizing profitable growth through initiatives like Fastlane, debit card penetration, and omni-channel offerings. Of course, all of that comes into play with a lot of their own products, whether it's Venmo, Braintree, checkout, branded checkout, all of that will work together. With regards to Fastlane, this new checkout experience is designed to be frictionless and easy to use, especially on mobile. Talked about mobile a couple of times, where basically they've not been doing quite well. It is also being offered as an omni-channel solution and has the potential to significantly increase conversion rates. With regards to monetization, while the focus in 2024 is on user adoption, driving volume basically, PayPal sees opportunities to monetize Fastlane in 2025 through various levers, and not just Fastlane, but every other aspect of the business as well. How easy is it to implement all of those things, especially Fastlane? So Fastlane is easy for merchants to implement, especially existing Braintree merchants and small businesses using BigCommerce, which I think if you use BigCommerce, it's basically a flip of the switch. He also said that Q2 is off to a strong start. The outlook was mid to low double digits non-GAAP EPS growth. They think they are trending ahead of that right now and expect, again, this is the first half of the year. A lot can change in the second half. Then he reaffirmed some more things we already knew, but it's always nice to hear. So maintains PayPal's dominant position in branded checkout, already the number one player in the market share and customer base, addresses the current weakness in mobile checkout experience, aiming to be the smoothest and easiest option, offers an omni-channel solution, allowing customers to use PayPal anywhere they shop, whether it's PayPal or Venmo, expand reach to global markets where tap to pay with PayPal isn't available yet. That's the thing also with a lot of Venmo users that were not happy. The money comes in, but there's no way to use that the way they've been using probably other apps. They want to pay for stuff, send, save, you name it. He also talked about the fact that today there are way more checkout options than there were previously. So how does PayPal stand out? Well, again, talking about the two-sided network here, also making sure that you have an incentive to use PayPal, you as a merchant and you as a buyer as well. Maybe through rewards, promotions, it's cheaper because maybe you buy through the app. Lots of stuff can be done, and that's one of the ways PayPal still stays on top and intends to stay on top for quite a while. And so the market clearly enjoyed that, because yesterday we've got that big green candle right here, which I think if we have to go back, I think the biggest jump we got was probably here earlier this year. Now, since then, we've got more information about the business, and I think the business has improved since January. Now, right now, of course, we're at some points where previously we were at back in March, and here back at the end of April, we were even closer to $70. We didn't hold. Now, let's see what happens in the coming days. On the daily, RSI is getting a bit high, but in my opinion, this thing still has some room left to run. If we go and check the weekly real quick, the weekly as well, RSI is fine there, but you can clearly see that previously on the weekly, this is where we were rejected, closer to the $68 mark or so. Let's see if right now the momentum is stronger than before. So overall, to conclude, more positive comments coming from management, in this case the CEO. The business is still doing quite well. We've got some analysts that are turning more bullish. We've got super investors now buying more shares. So the momentum, in my opinion, is shifting a little bit. But to me, it's still a long-term story. Continued execution is key. And I think $67 will look like peanuts years ahead. That's just me. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.